In response to a modest increase in U.S. Treasury bond yields, the U.S. dollar, USD, regains momentum, reversing a two-day corrective decline from its three-month high. This development provides the commodity with a headwind. Furthermore, the prevailing optimistic sentiment in stock markets functions to restrict the increase in value of the safe haven precious metal. Notwithstanding these elements, the Federal Reserve's (Fed) prospective interest rate cut expectations continue to bolster gold's downward trajectory, fueled by the U.S. retail sales report. In conjunction with geopolitical tensions in the Middle East, this anticipation may deter aggressive USD purchasing, thereby limiting losses for gold. The forthcoming U.S. macroeconomic data, Housing Starts and Michigan Consumer Sentiment Index, has shifted the attention of market participants. However, gold USD investors await the publication of the FOMC meeting minutes this week and the flash global PMIs on Wednesday and Thursday, respectively. Any sign of a weaker early rate cut could boost the buying pressure in the gold USD in the coming days. Gold USD daily price trades within a descending channel, where the overall context is bullish. The ideal trading approach in this structure is to look for a long opportunity, targeting the 2089.05 level. However, a bearish rejection from the channel resistance or dynamic 20 EMA could indicate a downside possibility. A daily candle below the 1972.95 level could extend the downside pressure towards the 1920.00 level.